Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really special one for you. We're going to be joined by a member of the executive team from TeraWulf. This is a crypto miner we've covered on the channel previously for an exclusive Q&A session, really covering and discussing some questions from subscribers or viewers who left comments on our last video. I'm really excited to get into this one for a number of reasons we're going to talk about in a second here. But before we do, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of TeraWulf, how you think they stack up to some of the other miners or crypto miners in this space, and if there's any other questions that you'd like answered in our next Q&A session. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got a special guest, Nazar Khan from TeraWulf. He's the CTO, the COO, and actually a co-founder of the company, here to answer some viewer questions. This is a company we've covered on the channel in the past. It's a Bitcoin mining operation in the United States. Really excited to have you on, Nazar, today. Thanks so much for being here with us.
Thank you. Thanks for having us.
Now, this is your first time on the channel in a kind of Q&A interview format, so can you give viewers a little bit of background about yourself and what it is TeraWulf's all about?
Sure. Again, thanks Bryce for having us. So just a little bit kind of background. We have been in the power business for over 20 years. So Paul Prager, who's our CEO, kind of partner and co-founder as well. We developed, built, operated, managed power generation facilities all over the world.
Okay.
At our peak, we had over 5 gigawatts of kind of capacity that we owned and managed. And it was both domestically in the United States as well as overseas.
Okay.
And what we learned through that is fundamentally infrastructure, how to build, develop, and manage infrastructure, how to understand kind of regulatory environments. If you think about power, which is a key input into the mining of Bitcoin, regulation is critical to kind of understanding kind of how power works, how power is priced, and where power is available. And so that was kind of critical to it. So we did that for 20 plus years. Again, we had a full team that owned, operated, even built some of our facilities. In 2017, 2018, a number of people started telling me about Bitcoin and Bitcoin mining and how energy was so important to it. And I said, hey, well, I didn't know much about Bitcoin at the time, but I said, well, if energy is involved, let's see, maybe I think I know a little bit about energy. And I quickly realized that most people in the space really didn't understand energy, right? Yeah. So they were very believers in Bitcoin, which I am as well, but they really didn't understand energy and energy infrastructure. And so we took a view and said, hey, Bitcoin's real, Bitcoin's going to have a tremendous amount of value. And in addition to that, energy is the most critical input into the mining of Bitcoin profitably for a long period of time through cycles. And so we, took one of our assets and started to run around and try to figure out how to develop it. Again, 2017, 2018, I didn't know about Bitcoin mining. I didn't know ASIC. And so we tried to find a partner, and we tried to say, hey, well, we know power, so let's go find someone who kind of knows what they're doing.
Okay.
And after 6 or 9 months, I kind of quickly realized that there wasn't, kind of a good partner for us. A lot of people said, hey, we'll just come in, give us everything, and we'll do it. But, we didn't feel comfortable. And again, given our background where we actually kind of design and build and operate our own things, I wasn't comfortable. So, one day I called up, our team, and I said, listen, we're going to basically build our own Bitcoin mining containers. And they kind of looked at me and, said, well, what do you mean? What is that? And I said, this is what we're going to do. And so we went about it. I mean, we visited a few sites, we made some relationships, and we kind of literally designed 3 of our own containers. We got 1,500 miners from Bitmain and started the process. And like anything, we made a lot of mistakes. I mean, it wasn't perfect by any means, but we had designed it, we had built it. And so in doing so, when those mistakes arose, we knew exactly, what had caused it, right? Because we had made a decision on how to design it. So, so that, gave us a really good start. And then, I'd met a person by the name of Merrick Akamoto, who was at the time kind of the single and sole employee of a company called Marathon Patent Group.
Okay.
Merrick was a visionary, and he said, hey, I'm going to build the biggest and baddest Bitcoin mining company in the world. And, I was able to convince him and say, hey, if that's what you're going to do, you need to partner with an infrastructure player who understands how to build, to design, and operate this stuff. I took them to a site we had in Montana and said, hey, there's a field. The only thing stopping 100 megawatts of operations to be there is, some capital, and, you as this public vehicle can provide that. And so, so long story short, we developed 100 megawatts of capacity in Montana for Marathon. At the time, the vast majority of Marathon's kind of operating capacity.
Yeah.
And then we took our own. We said, hey, if we can do this for others, let's go back to what we have been doing, which is kind of doing it for ourselves, right? In the power space, we kind of built and developed and designed our own facilities. So that was the genesis of TeraWulf, right? So we started TeraWulf with a couple of our own facilities. And so in 2021, we took two of our facilities, one in upstate New York, which is not too far from the Niagara Hydro facility. When all said and done there, we'll have about 110 megawatts of infrastructure that's operating there. We're at 60 megawatts today, and we'll get to that full 110 in the second quarter. And then our second site is adjacent to the Susquehanna nuclear plant in Pennsylvania. I think it'll be the largest behind the meter mining operation at a nuclear facility in the United States. And that's, coming online, as we speak here, and, will be kind of fully ramped up within a couple of months as well. And we'll have 50 megawatts net to us. We've got a joint venture partner there, but we'll have 50 megawatts net to us, fully operational here as well in the next, in the next couple of months. All in, we got two sites, 160 megawatts of total capacity, zero carbon energy, right? We're coming directly off the nuclear facility. We're 91% of our electrons we're consuming in upstate New York, are hydro and nuclear as well. And all in, we'll be at about 5.5 exahash of operating capacity. 5 exahash of that will be self-mining for us, and we've got a half an exahash host agreement that runs through calendar 23. So again, where we all started was power infrastructure, and that's what we really believe is kind of critical and core to Bitcoin mining as well. And that was kind of what led us to the space. And as I said, kind of 21, we formed TeraWulf, and it's been an interesting 24 months, right, to say the least. I think for us, right, it's always about kind of what we're doing at our sites, right? What are we doing in terms of kind of putting up the capacity, putting up the infrastructure, and making sure that the sites that we select are advantaged, not just kind of when things are going well, but also kind of in the tough times. And so if you look at our cost of power, on a blended basis between our two sites, we're at about 3.5 cents fully delivered for our cost of energy. We have a fixed price 2-cent deal off our nuclear facility. We have no credit or collateral required to be posted. And we think that's kind of a unicorn in the space to have, again, 2-cent power fixed for 5 years, coming off of a zero carbon energy source. And then upstate New York, we're a little over, a little under 4 cents kind of all in. So on a blended basis, we're at about 3.5 cents for our delivered cost of energy. So, and that again kind of gets back to our days in being the power space, right? So we were selling power, right? So we had a very acute awareness of what's the price of power in the market.
Cost,
And so effectively, we've now reversed that, right? Rather than selling power and trying to find the highest, price for our power, we think about it in the reverse, which is where is power trading the cheapest? Where does power consistently trade the cheapest? And that's where we should kind of go put our Bitcoin mining facilities.
Nice. So, awesome background there. And I love the story. Bitcoin and crypto is relatively new, right? But power's been around for a long time. So it makes a lot of sense to have that power background and understanding to bring to the table. We're going to talk about some of the construction updates in a sec here, the Bitmain purchase, what that means for TeraWulf. But I think it's really important context. And my next question was going to be, what are some of the key differentiators? And I think, Nazar, you've kind of touched on a lot of those, of really that expertise, the low power costs. I know I have a question in here about kind of those power costs in December that we'll get to. But aside from kind of what you've mentioned already, any key differentiators that the audience should be aware of when they're looking at a potential investment in TeraWulf?
Sure. I mean, like I said, I'd say 3 kind of key differentiators. One is focus on infrastructure, right? We design, we build, we own, we operate our own infrastructure. And we think that's kind of critical to the long-term profitability of mining operations. Second, as you said, is kind of low-cost power, and making sure that these Bitcoin mining loads are assets back to the grid. There's been a lot of talk in the space about, Bitcoin mining and its impact on the energy grids. And we believe that Bitcoin mining loads positioned properly and integrated into a grid properly can be an asset back to the grid, and if done so, are accretive to the overall operations and reliability of the grid, and done improperly can be burdens. And so, given our understanding of the grids and regulatory environment, we think we're well equipped to make these assets back to the grid. These are load sinks, and then also kind of effectively therefore procure low cost power. And then finally, our mission has been to kind of consume 100% zero carbon energy sources. So, literally the electrons we're consuming should be produced from zero carbon energy sources. As I said, at one of our sites, it's 100% because it's coming off a nuclear facility. And at our other site, 91% of the electrons we consume today are coming off zero carbon energy sources, both hydro and nuclear as well. And we've got a plan to bring that to 100% over the next couple of years.
Awesome. Yeah, the zero carbon thing is something we're seeing a lot in the space right now. And it's ironic, everybody a couple of years ago was bashing Bitcoin mining. It's so energy intensive and whatnot. But now, like you're saying, it can actually be a real help to the grid and stabilization. And it's ironic how stuff like that kind of works out and plays out. But again, your understanding of power systems is definitely helpful there. Now, you kind of alluded to this, some of the construction updates at your various different sites. Are you able to speak to that? What can we expect here in terms of kind of near-term catalysts over the next couple quarters?
Sure. I'd say the next 3-4 months are going to be extremely exciting for TeraWulf.
Okay.
As we've kind of publicly disclosed in some of our investor presentations, we will be completing construction at both of our sites, kind of, within the next, 3 months or so.
Yeah.
In the state of New York at our Lake Mariner facility, again, we're at 60 megawatts today. 110 megawatts is the full capacity that we're currently developing. Again, that's expected to come online early in the second quarter. The team's kind of, working away as we speak. And so we're well on schedule to meet that. So that's going to be exciting. At our nuclear facility in Susquehanna, we're ramping as we speak as well, and we should be kind of fully operational for our 50 megawatts early, in the second quarter as well. And so, you should expect to hear from us, I would say, pretty regularly here over the next, few months as, that capacity comes online. Sitting today, we're operating at about 1.5 exahash of self-mining.
Okay.
Again, I'd say within 90 to 120 days, we should be at 5 exahash of self-mining on our own, and then 5.5 exahash of kind of total mining with the half an exahash hosting agreement that we have as well. So this is, I think for investors in TeraWulf, the next 3-4 months, is what I think we've all been waiting for, from the company side as well. It's what we've been kind of working towards here, over the past year.
Yeah, exciting stuff, huge growth trajectory, and hopefully if I don't scare you away, we can have you on again in a couple months and you can speak to some of that updates.
Absolutely. And maybe next time, I come on, we can kind of show some kind of videos and pictures as well, just of the facilities, when they're kind of fully complete as well. And so,
you bet.
On that. Because, we're extremely proud. Again, everything that we own, we've kind of designed, we built, we operate. So we're extremely proud of our facilities. And so, so I'd love to show your subscribers as well, just kind of, what we're up to kind of on the ground at our sites. And again, one of our sites is a nuclear facility, which I think is pretty unique.
Pretty cool, yeah.
I go through some interesting things to make sure that, we're sitting literally, stone's throw away from an 2.5 gigawatt operating nuclear facility. And so that's kind of required its own set of design parameters just to make sure that, we're kind of complying with all the rules there. So
gotcha.
I would love to show some of that stuff.
Now, yeah, for sure. We'd love to see it. And a couple other kind of a speed round for you here. So one question that came up from a subscriber, we saw power prices spike specifically in the States in December due to the winter storm there. And I kind of saw your trend there. I think it was up around $13,000 a Bitcoin or something. Now it looks like it's come down in January back under 10. Is that something we can expect moving forward, that kind of volatility? Or are you are you back to normal kind of and not expecting any big spikes?
Yeah, power prices have been very benign, kind of both January and February as well.
Yeah.
And what I like to tell people is that when you think about, there's 8,760 hours in a year.
Okay.
And 2 a.m. on any given day, whether it's the dead of summer or the dead of winter, or anything in between, power prices usually don't trade that high, right? And so if you really think about what pulls up the average, it's limited to a couple hundred hours a year that really pull up the overall average, where the system is kind of most stressed and kind of demand is really high. And as Bitcoin miners, right, our job is effectively to not be mining during those hours. And so, what you should expect from us, again, that 3.5 cent kind of, fully loaded delivered average is what we think we can manage to. Is it going to be that every single month? No. So there's going to be, a number of months where it's below that. And I think when you start to see the results for February, March, and April, you're going to see it's going to be below that. And then other months, July, August, kind of, December, January, it may be higher than that. But on average, everything that we've seen as we've been ramping up, and everything we're seeing kind of looking ahead, indicates that we'll be within that. So I'd say things are back to normal, and hopefully as you see kind of February's results, you'll continue to see kind of a numbers are more reflective of what January was.
Great. Okay. And another thing I saw in your January production update, I think you pulled in about 157 Bitcoin. Speak to us a little bit about your reserve strategy. Hold on for dear life. Are you holding anything in reserve? Are you selling it as you mine it to finance the growth you talked about, or what's the strategy there?
Yeah, we're currently kind of monetizing the Bitcoin on a fairly regular basis.
Okay.
And our view is again, our job is to kind of mine profitably, kind of use that capital then to either, pay down our debt or reinvest into the business. And so we currently don't have a HODL strategy. And again, currently, we're monetizing that Bitcoin on a fairly regular basis, again, to either pay down debt or to kind of reinvest into operations.
Yeah, makes sense, and nice to see a little jump in the price, I'm sure, for you guys as you're selling. Now, M&A activity, this has kind of been a hot topic. We just had Hut 8 Mining, Sue Ennis on the big merger with US Bitcoin, or proposed merger. Sounds like most of your growth is going to be organic at your own facilities. Is there any plans for M&A stuff from TeraWulf, or not so much?
Sure. I mean, I think consolidation is going to be a big theme this year. And I think a lot of it comes from, everyone had, pretty ambitious plans to be 10, 15, 20 exahash. And most of us are stuck somewhere in the mid-single digits. And so, and the cost to run 5 or 8 exahash is the same, from an overhead perspective, is likely not too dissimilar from the cost to run a 15 exahash operation. And so there's going to be, we believe that there's, going to be consolidation in the space.
Okay.
It actually makes sense. And so, we're having discussions, along those lines, because again, we think there's kind of tremendous value, and it can be very accretive to the shareholders to the extent that you can kind of put operations together and significantly reduce your per unit cost of that overhead. Because if you think about it fundamentally, there's, a big chunk of just a cost of being public, right?
Yeah.
Again, whether it be public running, 2 exahash or 20 exahash, there's kind of, fixed public cost. And so, there is going to be consolidation that we think. And again, there's, we think we're fortunate in the sense that we don't necessarily have a mismatch in our portfolio, right? Every dollar that we pay for miners is miners that we have in our hands. We don't really have any balances or credits with Bitmain or with others. And then on the infrastructure side, we have a miner for every plug that we have, right? So we're not long or short. On the infrastructure side, we've kind of managed, both our self-mining capacity and our plugs in a good way. And so we're kind of matched up. So for us, it's going to be, can we find a partner that is accretive to our shareholders, right? And can kind of help increase the scale of the operations, and also then kind of minimize the per unit costs to mine, given that we can kind of, share some of those fixed costs of being a public company. I mean, we think we have, a tremendous management team. Paul's kind of, again, a 35-year kind of energy veteran. Yeah. Carrie Langlis, who's our chief strategy officer, former Goldman Sachs, she's there for 10 years. She's kind of brilliant on the strategy side. And Patrick Fleury, who's our CFO, again, has, 20 plus years of experience kind of investing. And we think is, I think is kind of world class. And so we've got we think we've got an extremely talented management team that, should be well positioned given both our asset base, right? We're coming to the end of our build out. So, we're going to be seeing the benefits of that full 5.5 exahash of kind of operating capacity flowing through our results. But in addition to that, we think we have a tremendous management team that's also going to be a leader in the space as the space kind of continues to institutionalize and grow. And so, yeah, I think, we're looking at a number of things, and we'll see if we can kind of figure something out.
Right on. And they've got you. Don't shortchange yourself. You're in there too. No, I'm just kidding. Okay, so last question for you, and this has been great. This is a lot of good context. We're heading into our next halving event in 2024. You talked about some of this big purchases from Bitmain and the expanding hash rate and capacity. What would you say if you had to say one thing is your key goal or focal point leading into that next event?
Operational efficiency.
Okay.
We have to make sure that every miner we have is optimizing the amount of hash it can produce, and we're putting energy into that ASIC at the lowest possible cost. So we've got a tremendous focus on operational efficiency, making sure that, again, every dollar of capex we have and every kind of kilowatt hour of electricity we're consuming is done in the most effective way. I think, our friends at Luxor kind of put out kind of, who mines the most Bitcoin for hash we have. And last month, as we've now started to hit our stride, I think we were the top, right? We, mined the most Bitcoin per hash, which again speaks to that kind of operational kind of efficiency. And so as we get into the halving, that's going to become even more pronounced, right? So, I like to tell people that literally every 1 cent, delta in power cost is almost, it's going to be, $15,000, $20,000 of, incremental, or sorry, $10,000 to $15,000 of incremental cost, on your cost of production on your Bitcoin, post halving. And then, from an operational efficiency perspective, right? I mean, post halving, again, the efficiency of consuming that electricity in the most efficient way becomes even more critical as well. So
for sure.
So for us, literally, this next 12 months is making sure that we're on our game on every single miner we have to make sure that we're getting the most out of it. And again, from a shareholder perspective, those are all assets that are there, and that's the lowest hanging fruit. And so that, again, for us is our number one priority, is making sure that we're getting the most out of everything that we got.
Yeah, I love it. I like looking at that metric as I compare different companies, the exahash per, Bitcoin per exahash. It's kind of a key efficiency metric. So that's a great place, I think, to end it today, Nazar. Thank you so much for being here. This was awesome. I think we got a lot of value out of this. You guys, if there's any questions we didn't get answered today, feel free to leave them in the comment section. I'll also leave a link to the company website, TeraWulf, so you guys can go take a look at the investor deck and whatnot. If you're not currently subscribed to the channel, feel free to do so. And if you're still watching, hopefully you found some value here, so make sure you hit the like button. Nazar, I'll kick it back to you for any closing comments. Thanks so much for being here with us today. We really appreciate your time.
Yeah, well, Bryce, thank you, and thank you to kind of all your subscribers for listening in here for a bit. Again, the next few months is going to be an extremely exciting part of our story, and so please, as Bryce said, if you have any questions, please let us know, and we'll get back to you. And yeah, keep watching the news flow that's going to be coming out, and we think there's a lot of good things coming in. Thank you for your support, and again, thank you for having us on.
Perfect. Well, have a great rest of your day, everyone, and thanks so much for watching.